All right, good morning and welcome to today live trading synthetic analysis section with Vetexx. So today we're going to be breaking down the synthetic market step by step. So we are analyzing the market and show what the market has for us today. And if today is your first time of joining our live session, do well to subscribe to this channel. Don't forget to hit the like button and also join our Telegram community where we share updates on setup and other follow up there so that you can be able to follow up, learn one or two from our live session, and then make money together. So today we are going to be sharing, I'm going to be sharing my screen with you, showing you everything step by step. And if you have any question, do well to ask in the comment section while I will attend to it. Okay. So before wasting much of our time, let's me share the screen with you, analyze the 14 pairs on our watch list today, and then let's look what the market has for us. So today we are going to be starting with the first pair that we have on our watch list. Okay, so we analyze the the volatility indices and the step indices. So today we are going to be starting with the first pair we have on our list. So basically there are 14 and we'll be starting with the first one on our list. So the first one on our list that we are going to be checking out is step 100. Okay, and if it's your first time of joining our live and you're wondering which broker we use for trading synthetic indices, the name of the broker is Deriv, and the link to register is in the description of this video. So you check it out, register, and then join our Telegram community for other follow-up. So let's check out step 100 and what it has for us today. So first of all, we have you have been anticipating a move on this step 100. Okay, I know if you are just looking at this today, we already marked it out yesterday, and we are going to be starting all over today again. We are going to be marking everything today again, so you understand why we mark it out. Okay, so every day before any analysis, I always show you the trading model we use, which is the advanced market structure. The other people call it algo, but the advanced market structure is the name I call it, and that is the name. So first of all, we have our pattern to be like this because before we do any analysis, we always do what they call the top-down analysis, where we analyze pair from the higher time frame to the lower time frame. So the particular pair will give us a direction if the trend is bearish or if the trend is bullish, and then we ride along with it. All right. So what we do today is that we are going to be doing the top-down analysis to know the direction of each market so that we'll be able to scale down to the lower time frame and get our continuation. So first of all, this is the trading model. This is the pattern we always look at for. First of all, price will always give us a higher, giving us the higher high where we want to buy. Okay, so this is the high the price will first create. Okay, once price creates this, okay, this zone here becomes our liquidity that needs to be swept out. Okay, now price will retrace back, take out this newly created high, which we call our transactional liquidity, which is the high. Okay, now price will take it out. Now this liquidity becomes sweep of liquidity. Okay, now this liquidity here has been swept. Okay, this high here becomes our protected high. So we have higher high here. Okay, now price will come back to take out this newly created low so that we'll have our first break of structure. Okay, now this becomes our first break of structure, right? Now price will still do a 50% retracement. Okay, from this zone to this point, this zone here is our 50%. Price will give us our 50% retracement and then break this newly created low, giving us our second break of structure. So right now we have one sweep of liquidity, protected high, then structural liquidity, which is used for continuation, and then price will take out this newly created low. So basically what we look out for is that we must have two sweep of liquidity and two break of structure, right? Now price will now take out this low, giving us our second break of structure, and price will. Now this is the pattern. Once the pattern is formed like this, price will retrace into this zone, take out this newly created liquidity, structural liquidity, okay, then continue to the opposite direction. So this liquidity, this first one here is used for correction, while this one is used for continuation. That is why if price take it out, price will always continue to the opposite direction. Okay, price will always continue to the opposite direction. So remember, we must have two break of structure. This is break of structure number one, and this is break of structure number two, which is this. And then we have our first strip of liquidity, which is this. This is our first strip of liquidity, and this is our second liquidity. Okay, first liquidity, second liquidity. You know that this liquidity now was swept by this to continue to the opposite direction. So this high here becomes our protected high. This becomes our point of interest. So this advanced market structure, it has 5 rules. Okay, rule number one: price must give you your first sweep of liquidity, which is this. Price sweep this liquidity. Okay, rule number two: price will give you your price will retrace back, take out the newly created low, giving you your first break of structure. All right. Rule number three: price will retrace 50% to give you your structural liquidity. Rule number four: price will retrace back to take out the newly created low, giving you your second break of structure, which is this. And rule number five: price will take out the newly created liquidity and continue to the opposite direction, which is rule number five. So rule number one is this one, your first liquidity. Rule number two is your first break of structure. Rule number three is your newly created high, which is your structural liquidity. Rule number four, price giving you your second break of structure. And rule number five, price going into your point of interest and continue to the opposite direction. So this is basically it. So the same thing you look out for when you want to sell is the same thing you look out for when you want to buy. You can see this. Okay, your first break of structure, your first strip of liquidity, first break of structure, second break of structure, structural liquidity, price taking it out and continue to the opposite direction. So it's as simple as that. So what we do is that once we once this is what to look out for on the 24-hour time frame, weekly time frame, we scale down to the hourly time frame, which is the 4-hour time frame, 1 hour time frame. Once we see this on the 1 hour time frame, and then we'll scale down to the lower time frame, which is like 15 minutes, 10 minutes, and 5 minutes, and look out for this same pattern on the lower time frame for our what continuation. All right. So now let's check out V20. Let's check out this step 100 and check what it does for us. So now, if you don't still get it clear, okay, all you have to do is to go to the playlist on this channel where I wrote the advanced market structure. I already explained market structure, point of interest, supply, demand, confirmation entry, top-down analysis. So if you dedicate your time to watching those videos, you are going to get a clearer understanding. So whenever I'm doing analysis, you'll be able to follow it clearly. So this is the explanation of it. So what I'm going to be doing now for the next 14 pairs I'll be analyzing is looking out for this pattern on those pairs. Once I see one, I'll scale down to the lower time frame and mark out our setup. And if there's anyone that is in POI at the moment, we'll execute the trade live together. So let's move on and check out what the market is showing us today. So when you are doing your top-down analysis, you start from the higher time frame. The higher time frame gives you a clearer direction of where the market is coming from and where it's going to. So on the 24-hour time frame on step 100, you can clearly see that we have a sweep of liquidity here. These are sweep of liquidity. Price retrace back, take out the newly created low. It take out this newly created low, which is rule number 2, giving us our first break of structure. Now, rule number 3, price retrace 50% to give us our structural liquidity, which is this. Okay. And rule number 4 is that price retrace, take out the newly created low, giving us our second break of structure, which is rule number 4. Now, what you're anticipating now is rule number 5. Okay. First of all, let me mark out the protected high. So what we're anticipating now is rule number 5. Rule number 5 is price should take out this newly created liquidity like this and continue to the opposite direction. So once price take out this newly created liquidity on the 24-hour time frame, the next time frame we are going to be anticipating this same pattern to form is on the 4-hour time frame. So when price form this pattern on the 4-hour time frame, we can then start looking for our continuation like this, continuation to form like this. Okay, so once our pattern form like this, we now anticipate price to always take out the structural liquidity and continue to the opposite direction. So this is what we anticipate. We anticipate this move now on the 4-hour time frame, on the 24-hour time frame. So we're anticipating price to come to this POI and give us another continuation on the 4-hour time frame. So once price give us the continuation on the 4-hour time frame in such a way like this, okay, in such a way like this, then we can scale down to the intermediate time frame, which is 30 minutes, 15 minutes, 10 minutes, and the rest. Okay, so that we'll be able to take more trades on those time frame. Okay, so this is what you're anticipating on step 100. So let's check out step 4 or the 4-hour time frame. If price give us a continuation or a setup on the 4-hour time frame, then we can easily scale down to the 15 minutes when price tap into our POI. So let's check the 4-hour time frame, and if there's anything there, we'll mark it out and we anticipate. So clearly you can see we have something to anticipate on step 400. First of all, we have our rule number 1, which is sweep of liquidity, which is here. Secondly, we have our rule number 2, excuse me. Secondly, we have our rule number 2, which is this: price take out the newly created low, giving us our first break of structure. Thirdly, we have our rule number 3, price retrace 50% to give us our structural liquidity. And we have our rule number 4, which means price take out the newly created low, giving us our second break of structure. And then we have our rule number, this is our protected high, and then we are anticipating our rule number 5, price to take out this liquidity. Okay, if price is coming into this POI, what is trying to do is that it wants to take out this newly created liquidity to continue to the opposite direction. So now we won't take our entry on this point of interest because of the drawdown it will put us into. That is why we always scale down to the 15 minutes, 10 minutes time frame for our execution. So once price tap into this zone on the 4-hour POI, we anticipate our continuation on this time frame, continuation to form like this on the 15 minutes or 10 minutes. So now if we take a trade on this POI on the 15 minutes time frame, we'll be able to hold it throughout the sell. Okay, if you can hold it, you can hold it, but if you can't hold it, you'll be anticipating more sell continuation until price take out this target. So this is your target, this is your starting point, and then this point is your finish point. This point of interest is your starting point, and this low here is your finish point. So this is what you're anticipating on step 100 at the moment. So if step 100 give us what you are looking for, we'll start taking more sales on it. But until then, we'll sit on our hands and see what the market is going to definitely do. So that is all with step 100. So the next pair on our list is V100, Volatility 100 Index. Now on Volatility 100 Index, okay, starting from the weekly time frame is on a bearish move. The trend is on a bearish move on the weekly time frame. And what you are going to be doing is, let's check out if you're anticipating any structure on a daily time frame. So clearly you can see our rule number 1, which is this. We have our sweep of liquidity, which is this, which is rule number one. We have our rule number two, first break of structure, which is this. We have our rule number three, structural liquidity, which is this. And we have our rule number four, which is our second break of structure. Now we're anticipating our rule number five to come into the POI and take out the newly created liquidity and continue to the opposite direction. So the whole of these zones becomes our point of interest. Okay, so you can see price just weak it out, but we want price to get into the zone more better. So that remember this is our 24-hour time frame. The 24-hour time frame, weekly time frame, we basically use it as our directional bias. Okay, those time frame give us our direction, where price is coming from, where it's going to. So basically, if price starts reacting from this point of interest after taking out this newly created liquidity, we are going to anticipate a move from this point A at this point and this point. So this is our point A and this is our point B, starting point and finish point. So once price come here, we'll anticipate another move on the 4-hour time frame. So once price come to this zone, we'll anticipate a move like this on the 4-hour time frame. So price will come to this POI on the 4-hour time frame and start giving us continuation on the 15 minutes, 10 minutes time frame until it take out this low. So until it does that, you are going to be anticipating, we will be sitting on our hands and watch what it's going to do. So basically, if you see a continuation on the 4-hour time frame and you know that the trend is bearish, all you have to do is scale to the 15 minutes time frame or 10 minutes time frame for your continuation. But if you see the POI on the 24-hour time frame and price start reacting from the POI, all you have to do is scale down to the 4-hour time frame and check if there is a continuation on the 4-hour time frame or 1-hour time frame. If you don't see it, you wait until it gives you before you scale down to the 15 minutes time frame. So it's basically weekly, daily, 4-hour time frame, 1-hour time frame before you always go to your lower time frame. So you must see a continuation on the 4-hour time frame or on the 1-hour time frame. This will increase your win rate and accuracy of how you take trade. So this will make you select quality over quantity of setup. So V100 currently, this is what you're anticipating. We want price to dip more into this zone and then start pushing to the opposite direction. Okay, so that is all about V100 today. So the next pair we are going to be checking out is the 500. Let's see what the 500 has for us today. Okay, so starting from the weekly time frame, the 500 has been bearish on the weekly time frame. And remember, on the Deriv trading view, the time frame, the highest time frame we can see is 24-hour time frame. So the only way you know that you are following the right direction is using your MT5 to check from the higher time frame, which is the monthly to weekly, and know the direction market is going to. Because it is possible for price to be bullish on the weekly time frame, okay, and then you are bearish on the daily time frame. But at the end of the day, price will neutralize your bearish move and continue with the bullish move. Because if price is bullish on the weekly time frame, and you are bearish on the daily time frame, the most important thing is the time frame that price first take out the structural liquidity is what the market is going to obey. So whatever move you are seeing in the opposite direction is all going to be retracement. So it's always advisable to start your analysis from the weekly time frame, okay, and know where the market is coming from. That is why top-down analysis is key. Okay, so now that we know that step 500 is bearish on the weekly time frame and it's not giving us any bearish move on the 24-hour time frame, what do we do next? We'll scale down to the 4-hour time frame and check if there's a continuation on the 4-hour time frame. So what we have now is we have price has been selling on the 4-hour time frame almost about to smash TP, and then it retraces back. Okay, but then let's see something. First of all, we have our first rows here, which is first sweep of liquidity, which is this. After this first sweep of liquidity, we have our protected high, which is this. Now this is our row number one, and this is our row number two, first break of structure. Row number three, price retrace 50% to give us another created high, which is our structural liquidity, newly created liquidity. And row number four, price take out the newly created low, giving us our second break of what? Of structure. Now this is it. And this zone, row number five, price take out the newly created liquidity and continue its move to the opposite direction. You can see it's tapped into this POI after taking out the structural liquidity, and it's continuing to the opposite direction. Now, price is doing something very important that we need to look into. Okay, now let's check it out. All right, now let's go to the 1 hour time frame and see what price is trying to do here. Price has been selling, then all of a sudden it started retracing. But then let's check if this is going to be another continuation setup on the hourly time frame so that we can anticipate it. First of all, you can see we have our sweep of liquidity, which is our row number one, and then we have our protected high. After this protected high, we have our first sweep of liquidity, which is this, our first break of structure, and then we have our newly created price retrace 50% to give us a newly created high, which is going to serve as our structural liquidity. So let's use the 50% if Fibonacci retracement and check if it is up to 50%, then it will be valid to use. Now, yes, it's up to 50%, so we are going to be considering it as our structural liquidity, which is our second liquidity, first liquidity, second liquidity here. So we are going to be marking it out, and then row number four, price give us a newly created. Price take out the newly created low, giving us our what? Second break of structure. Now, this zone becomes our point of interest. Price is currently in this zone. Okay, price is currently in this zone. So what we are going to do is that price is going to start moving to the opposite direction. Hopefully, it does that because that is what you're anticipating at the moment. Okay, let's sit on our hands and see what price is going to start doing. If price are giving us continuation, we are going to start taking it, okay, until price take out this target, and then we'll continue from the 4 hour time frame sell we'll be anticipating. Okay, so that is all about step 500. So the next pair we are going to be checking is V31S, right? V31S. V31S, we already marked out this setup on the lower time frame, on the higher time frame, because on the weekly time frame it has been bearish. On the daily time frame, this is what we have. First of all, we have our row number one, which is our sweep of liquidity. Second, we have our row number two, which is our first break of structure. Okay, this is it, first break of structure, which is this. Row number three, we have structural liquidity, price retrace to give us a newly created liquidity, which is this, and it retraced back to take out the newly created low, giving us our what? Second break of structure, which is this. Okay, and then price retrace 50, price take out, retrace back into the POI, taking out our newly created liquidity and continue to the opposite direction. Clearly, you can see this point of interest, price has tapped into it and is selling to the opposite direction. Now let's get to the 4 hour time frame if you are going to start anticipating a continuation on the 4 hour time frame. Once we see that, then that is what you are going to be waiting for. Okay, now let's check. There's nothing happening currently on the 4 hour time frame on V30S. So let's check the 1 hour time frame if you can possibly anticipate a move on the 1 hour time frame. The 1 hour time frame, still yet nothing. Let me check this. Let's check the 30 minutes and see. On the 30 minutes time frame, we don't really have anything clear on this 30 minutes time frame. There's nothing clear here, and we don't want to force any setup at the moment. We want it to give us everything clean and clear so that whenever we take our trade, we'll have more confidence in it. So We already know that V30S is bearish on the 24-hour time frame. So what we are going to be doing is waiting for it to give us a continuation on the 1 hour or 4 hour time frame before we can go to the 15 minutes, 10 minutes time frame and look out for our setup. So nothing is happening on 31S yet. We are just going to be anticipating. So the next we are going to be checking is V91S. V91S. What's happening on V91S? Starting from the weekly time frame, V91S is on a bearish move. Has been on a bearish move for months. Okay, and let's check out the 4 hour time frame. Let's check out the 24-hour time frame if it's showing us anything. So first of all, on the 24-hour time frame on V91S, we have this. We have our sweep of liquidity right here. And we have our protected high right here. Rule number one. Rule number two is here. First break of structure. Rule number three, price giving us our structural liquidity. Rule number four, second break of structure. This zone becomes our point of interest. What does price do? Price tap into it and continue to the opposite The opposite direction. Now we know where price is coming from, the 24-hour time frame. And where price is going to on the 24-hour time frame. So now this is our starting point, and this is where price is going to on the 24-hour time frame. From this point, it's coming to this point. You can see price is almost coming there to see how accurate we are. Now, we know where price is coming from the 24-hour time frame. This is what I was trying to show you on the previous pair we analyzed, which is V31S. So now that we know where price is coming from the 24-hour, we'll go to the 4-hour time frame and check if there's a continuation on the 4-hour time frame. Clearly, you can see our first rule here, which is sweep of liquidity. And this is our rule number two, break of structure, first break of structure. And this is rule number three, structural liquidity. Rule number four, second break of structure. And this zone becomes our point of interest, our protected high. Now the whole of this zone from point of interest to the top of structural liquidity is our POI, point of interest. Okay. Now let's check if price tap into the point of interest and continue to the opposite direction. Of course, price tap into this point of interest and it continue its move to the opposite direction. So this is what happened on the 4-hour time frame. So once you see this happening on the 4-hour time frame, price is almost trying to hit its target here. Okay, so this is point A and this is point B. This is the starting point, and this here is the finish point. You can see that price is almost smashing its target at this point. Okay, price is almost smashing its target at this point. So what we do is go to the 4-hour time frame. So once you have gotten this direction, you can just stay on the lower time frame, which is the 10 minutes and 15 minutes time frame. At this point, price is going to start respecting a lot of structures because the direction is correct. Okay, you see 15 minutes time frame trade, you take another 15, you take another 10 minutes, you trade 5 minutes, you take, start taking continuation until price take out its target. So let's check out the 15 minutes time frame if there's any continuation setup. So on the 15 minutes, we don't have anything at the moment. There's nothing happening on the 15 minutes time frame. If price smashes the targets, good and fine. You start anticipating another move on the 4-hour time frame or 1-hour time frame until price take out the 24-hour target. But until then, we are going to just start sitting on our hands and see what is going to happen next. Okay, now let's look at the next pair which is on our list, which is V25-1S. V25-1S. We have series of continuation on V25-1S, but price don't want to come back yet. So on the 24-hour time frame, the trend is bearish, is bullish. On the weekly time frame, is still bullish, but on the 4-hour time frame, we have a continuation on the 4-hour time frame. We've marked this down for like 2 days. Is it not 3 to 5 days now? But no matter how long it takes, price is going to come back to this point of interest, respect it, and give us our continuation. So this is what we're anticipating. First of all, we have our rule number one here, which is sweep of liquidity. Rule number two, first break of structure. Rule number three, second liquidity that need to be taken out, that need to be swept out. And rule number four, we're anticipating rule number five to come into this zone to take this newly created liquidity out and continue to the opposite direction. If price didn't come back to this zone, we'll be anticipating price to react from the recent structure, which is this. So price is expected to come back to this zone, take out this newly created liquidity, and start giving us continuation on the lower time frame. So then we can start moving along with it. So this is what we are anticipating at the moment. So if this is your first time of joining our live session, every day on this session, we analyze a synthetic market, all the pairs, basically 14 at the moment, which is the step indices and the volatility indices from 6 a.m. to 7 a.m. And if this is your first time and you're watching this video on replay, do well to subscribe so that whenever I go live anytime, maybe tomorrow or next, you'll be the first to join the live. All right. So I will see you guys, and make sure you like this video and share to your status or your social media platform so that other people can join and benefit from it. So this is what you're anticipating on V25-1S, and hopefully price do what we want, because we will not force any trade. We will anticipate what we mark down and then we wait for it to play out. That is why patience is very important when it comes to trading. You allow price to come to you, you don't chase after price, because when you chase after price, price is going to start, you are going to start losing yourself. You are no longer following the rules and principles you created for yourself. So that has to do with psychological aspect of trading. Okay, so the next pair now, this is what I'm anticipating of V25-1S index, and we are going to check the next pair on our list, which is V75-1S. Let's check out V75-1S. So starting from the weekly time frame, the trend is on a bearish move. It's on a bearish move, but it's not giving us the structure we trade. Okay, but it's on a bearish move. So that way, we'll go to the 24-hour time frame and check if you can find our own structure. So first of all, you can see we have our first rule, which is sweep of liquidity, sitting right here. Okay, our second rule, which is our first break of structure, which is right here, and then we have our protected high. Okay, and then price give us a 50% retracement, giving us our fourth rule, which is structural liquidity that need to be taken out later, which is this. And then we have our second break of structure, which is this. So you see that our rules, our four rules are now complete. So the fifth rule is that price will take out this newly created liquidity and continue to the opposite direction. Clearly, you can see that price has taken out this newly created liquidity, and what is it doing? It's continuing to the opposite direction, which is right here. And this zone is our point of interest, and this point is our finish point. This zone here, this point of interest is our starting point where price is going to react from, and this low here is going to be our finish point where price is expected to come to. Okay, so now that we have it on the 24-hour time frame, let's go down to the 4-hour time frame if we find our structure on the 4-hour time frame before we can start thinking of, oh, let's start taking trade on it. Now clearly you see that we have our first rule here on the 4-hour time frame, which is this sweep of liquidity, protected high. We have our first break of structure, which is this. Okay, price retrace 50% to give us our what structural liquidity, which is this. Rule number 3. Rule number 4, price take out the newly created low, giving us our what second break of structure, which is this. And rule number 5 is what we are anticipating for price to do. We come here, come into this zone, take out this newly created liquidity, tap into our point of interest, and start giving us continuation on the 15 minutes time frame like this. So once you give us this continuation, then once price come into our point of interest, we then look out for confirmation entry and sell to the opposite direction. So basically, this is what you do every day. What you look out for on the higher time frame and you got your direction is what you start looking out for on the lower time frame to also get your continuation. Okay, so that is what basically what we do here every day. So it's as simple and it's as straightforward. That's why I'm keeping things simple so that you understand every bit of it step by step. All right. Now let's move on to the next pair. This is what I'm anticipating on V75 1s. So let's check out the next pair on our list, which is V15 index. Let's check out V15 index real quick. Starting from the 24-hour time frame, where is price coming from and where is it going to? On the 24-hour time frame, we can't really find where price is coming to and where it's going to. So let's check out the 4-hour time frame. Where is price coming to and where is price going to? So first of all, we can see our first rule here, which is this sweep of liquidity. It's our protected high. And then this is our first break of structure, which is this. Price retrace 50% and give us what? Our structural liquidity, which is this right here. And price retrace back and give us our what? Second break of structure, which is this zone here. Which is this zone here. And then the whole of this zone becomes what? Point of interest. So when price take out this point of interest, what do we anticipate? We start looking for continuation on the 15 minutes time frame. So price is going to start selling on the 15 minutes time frame until it take out this target. Okay. So I was active when price was doing this. So I'm always on the 15 minutes time frame, looking out for continuation. Price give us series of continuation on the 15 minutes time frame. We ate a lot of it, and then until price take out the target. Now this zone has been used. So what we are going to be looking at for next is the next recent point of interest, which is this. Okay, you can see clearly we have our what? We have our first rules, which is what? Our sweep of liquidity, which is right here. Okay, and then we have our second rule, first break of structure, which is here. Okay, this is our protected high. Price doesn't need to pass through this protected high. If price crosses it, it's been invalidated. And then we have what? Our second rules, our retracement, 50% retracement to give us our newly created high, newly created liquidity, and then price take out the newly created low, giving us our what? Second break of structure. So this is an A plus setup. And this zone becomes our what? Point of interest. So we're anticipating what now? We're anticipating rule number 5 of price to come, move like this and continue and come into this point of interest. So once price come into this point of interest and start reacting, we will then scale down to the lower time frame, 15 minutes, 10 minutes, and 5 minutes, and start looking for this same pattern on the 15 minutes, 10 minutes time frame and start selling until price take out the target. Okay. Okay, so this is basically what we're anticipating on V50. Okay, this is what we're anticipating on V50. If price does that, we'll take more sell, and if price doesn't, we'll sit on our hands. All right, so that's basically it. So the next pair we are going to be checking is what? We're going to be checking V10S. What does V10S have for us today? V10S has been on a bearish move. Okay, has been on a bullish move on the weekly time frame, a bullish move on the daily time frame, and then on the weekly you can see clearly that on the daily time frame, it doesn't have anything currently going on. Nothing is really happening on this time frame. So what do? Go to the 4 hour time frame without wasting much of our time and check if there's something we can anticipate on this 4 hour time frame. So now the 4 hour time frame, you can really see some things clearly. So we'll check out the 1 hour time frame. Let's check if you can see what you are looking for. So on the 1 hour time frame, we have our rule number one, which is remember the trend is bullish. So we have our rule number one, which is going to be this, our sweep of liquidity, which is right here. Rule number one. Rule number two, our first break of structure, which is going to be here. Rule number three, price give us our structural liquidity, which is here. So let's check if this zone, from this zone to this zone, is up to 50% using our Fibonacci retracement tool. So as you can see, it's up to 50%. Why? Because it crosses this zone. 50%, 50, 0.5 pass this zone before I take it to this newly created high. Okay, so this is up to 50%. So this structural liquidity is now valid. Okay, since that is valid, what do? We'll mark it as our structural liquidity. Then this is what you're anticipating. Price needs to take out this newly created high to give us our what structural liquidity. So once price to give us our second break of structure. So once price take it out, then we will anticipate a move. So this is basically what I'm anticipating right now. I'm expecting price to do this. Price need to come to this place, do this. Okay, price need to come here, do this, and then start buying, consolidating, come into this zone, and then take his move to the opposite direction. So this is what we are going to be anticipating on V10S on the 1 hour time frame. But it doesn't do so. This is what once you come into this zone, it will start giving us our continuation. All right, it will start giving us continuation setup on the lower time frame, which is going to be something like this. Okay, and come into our POI and start buying to the opposite direction. So this is basically what we are anticipating. This is what we are going to be anticipating. This move right here. So for us to start anticipating, our price needs to take out this newly created high to give us our second break of structure. So we are going to have it like this. So once we have it like this, rule number one, rule number two, rule number three, rule number four, and then rule number five coming to this POI and continue to the opposite direction. So this is it. Exactly what you are going to be anticipating, right? Going to be anticipating this. So once price do this, we start scrolling to the 15 minutes, 10 minutes time frame and start looking for continuation. Hope you are getting it. Hope you are understanding. Hope you all are understanding and following. So if you have any question, you can always drop your question in the comment section and let's keep going. 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 All right, if this is your first time of joining, don't forget to like this section. Don't forget to subscribe and don't forget to join our Telegram community. Invite your friends so that they can come and learn a lot from this live session. All right. So we are going to be checking out V75 next on our watch list, which is going to be this. Starting from the weekly time frame, V25 has been bearish. It has been on the really bearish move. It has been on a really bearish move. So this is what we're going to be having. Now currently this is what price is showing us. So now that we don't know where price is coming from on the 24-hour time frame because it has already smashed the 24-hour time frame target. Let's go to the 4-hour time frame and check if there's anything tangible on the 4-hour time frame. If you can see anything, let's check if this structural liquidity is up to this row number 3 is up to 50%. Nah, it's not up to 50%. So this is what you can only anticipate at the moment. Okay, this is what you can only anticipate at the moment. Hopefully price come back to this zone. So we have our row number 1, our super of liquidity, which is this. We have our row number 2, which is first break of structure. Row number 3, we have our structural liquidity. So this liquidity is used for correction. This one is used for continuation. That's why anytime price take it out, it always continue to the opposite direction. Okay. So row number 4, we have second break of structure, which is this. And then this becomes our what? Our projected high. And this zone becomes what? Our point of interest. So we're anticipating the price to come into this zone. Take out this newly created structural liquidity, or newly created liquidity, or can be called, and continue to the opposite direction and start giving us continuation on the 15 minutes, 10 minutes, and 5 minutes time frame. So we anticipate this. So we anticipate price to start giving us continuation like this once it taps into our point of interest. Sell, take out the target, give us another one, come into the PY, take out the target, give us another one. I take out the target, give us, and keep giving us. So this is basically what you are going to be anticipating once price does this. So this is how we take continuation on the higher time frame. Once on the lower time frame, once we get our direction on the higher time frame. So this is what increases our win rate. You can take this trade, you do your 1 to 4 R, 1 to 5, 1 to 4 R, 1 to 5. At the end of the day, you see that you've compounded up to like 1 to 20 RR. So this is what you are going to be doing. Okay, so you don't have to be holding trade for days, for weeks, because you're a day trader. So once price does this, this is what you're always anticipating until price, you're going to be anticipating sell until price take out this target. Then we know that we are done with the pair until price give us another continuation structure on the higher time frame. Then we can keep taking more continuation on the lower time frame, such as the 15 minutes, the 10 minutes, and the 5 minutes. So once you understand this, you begin to trade with logic and not just trading pattern. This is why top-down analysis is key, because you already know where price is coming from on the higher time frame. You now know that this is where it's going to go to, no matter what it takes on the higher time frame. So you go to the lower time frame and start taking those continuation that is giving you on the lower time frame. You start taking this, take profit to make money, take profit to make money. You take losses, you learn from it. Okay, but every sign for you that you take a loss on a pair is already there. That is why you need to always journal your trade, understand what you are doing, then you can always be at your best. All right, so that is what you are going, that is what I explain here every single day on this live synthetic analysis section. Okay, so this is your first time, that is why you need to subscribe so that you always get value from this class and then help you in your trading journey. The same thing you're learning from here, you can apply it in your crypto, you can apply it in your currency, you can apply it any market, and you are going to make shit ton of money from it. Okay, so let's move on to the next pair we have on our list and see if we are going to find something very, very tangible. So we have step 300. Let's check out step 300 real quick. Step 300 currently is bullish, is bearish on the weekly time frame, but no continuation on the daily time frame. All right, and let's check 4-hour time frame if you are going to see anything. Okay, Currently, we don't have a continuation on the 4-hour time frame. Let's check out the 1-hour time frame. And nothing is really happening on the 1-hour time frame too. Okay, nothing is happening on the 1-hour time frame. So we don't have anything currently on step 300. So let's check out the next pair on our list, which is Volatility 50 Index. On the daily time frame, Volatility 50 Index gives us a continuation, and that is what we have been anticipating for the past. That's what we have been trading with. That's the trend we have been following with for the past 2 weeks now. So you can see our rule number one hidden here, which is sweep of liquidity. Open it clearly. Mm, this is it. Sweep of liquidity. Never protected high. Now this is our rule number one. Rule number two is this. So first break of structure, which is here. Rule number two, we have structural liquidity. Remember, this is rule number three. And then we have our second break of structure, which is this. Rule number four. And rule number five, price to come into this POI. Take out the target and continue to the opposite what? Direction. Okay, price need to take out this target and continue to the opposite direction. Alright. Now this is going to be our finish point, our starting point, and this low here is our finish point. So until price take out this low, we will not have, you still have a business with this pair. So let's go to the 4-hour time frame. What's happening? Let's go to the 4-hour time frame and check if you are going to be anticipating a continuation on the 4-hour time frame. So currently on the 4-hour time frame, we have this, but it's already been used. We have a protected high first of all. We have a protected high first of all here. And then what's happening to my mouse? Then we have our rule number one, which is this. Rule number one, which is this, and then rule number two, first break of structure. Rule number three, structural liquidity that need to be taken out. And rule number four, price need to come into this zone. I think I might end this live once at 7 a.m. because my mouse has been misbehaving. I think the battery on it is dead. So price need to take out this, need to tap into this point of interest and continue to the opposite direction. So this is the starting point and this is the finish point. You can see price has already used the structural liquidity, so this zone is no longer valid. So we'll move on to the next one, which is going to be this on the 1-hour time frame. So let's switch to the 1-hour time frame and check. So on the 1-hour time frame, we are eagerly expecting this. We are really expecting this. We have been expecting this for the past how many days, so it's finally coming back. So we have our first rule here, sweep of liquidity. We have our protected high. We have our first break of structure, which is this. We have our structural liquidity, which is this zone here. And then we have our second break of structure, which is this zone. And the whole of this box, the whole of this zone, from structural liquidity to the protected high becomes our what point of interest. So now we're anticipating this price to come into this zone and start giving us continuation on the lower time frame until this price is taken out, until this target is taken out. Our time is almost up. We are checking out V100S. What do we have on V100S? On the 24-hour time frame, V100S is bullish. On the 4-hour time frame, is still bullish. The reason why it's bullish is that on the weekly time frame, we have a bullish move on V25 on the V100 index, and it hasn't smashed its target on the weekly time frame. So on the 4-hour time frame, this is what we have been anticipating. This is our first rule here, sweep of liquidity. Our second rule, first break of structure. Our third rule, price retrace 50% to give us structural liquidity, and this is our protected low. So this is our point of interest. So we're anticipating price to come into this zone now, right, and start giving us continuation on the 15 minutes time frame, so that we can start taking trade on this zone, right? So we can start taking continuation on the lower time frame until price smashes its target. But if it doesn't come back to this zone, we have another recent point of interest, which is here, our recent structure, our sweep, our protected low here, first break of structure, 50% retracement, giving us our structural liquidity, second break of structure, and then we have our point of interest. So we're anticipating this price to come into this zone and give us the same thing we anticipate below here. Come into this zone and give us continuation on the 15 minutes, 10 minutes, or 5 minutes time frame until it take out the target. So this is what we're anticipating on V100S. If price doesn't react from this recent structure, it will definitely react from the one below. Okay, so that is what we're anticipating. So now go on to the next pair, which is step 200. Let's check out step 200. So step 200 is bearish on the weekly time frame, but on the 24-hour time frame, we're anticipating a continuation. Price to come back here. Let's start taking it. Okay, so we have this is the recent point of. You are going to be only marking the recent point of interest at the moment, the recent structure we have at the moment, because we're almost out of time. So first of all, we have our sweep of liquidity, which is rule number 1 here. Rule number 2, we have we have protected high. Rule number 2, we have first break of structure. Rule number 3, we have our structural liquidity, and rule number 4, we have second break of structure. So this zone becomes our what point of interest. So after this point of interest, the next thing price is expected to do is to tap into this, is to come into this zone. Come into this zone. Give us a continuation on the 4-hour time, 15 minutes and 10 minutes time frames. Come into that point of interest, because that is the point we are only interested in. Until then, we'll sit on our hands. Okay, so this is going to be the starting point, and this below is going to be the finish point. So let's move on to the next pair on our watch list, which is step 400. Step 400, currently we don't have anything on step 400. We checked it yesterday, we don't have anything, and up to now there's nothing happening on step 400. So until price give us something tangible on step 400, because it smashes TP on the weekly time frame, smashes target on the daily time frame, on the 4 hour time frame, we are not seeing anything tangible. The 1 hour time frame, we are not seeing anything tangible still. So we are going to be sitting on our hands until it gives us something more better, more clear. Then we can start anticipating more move on it. So currently there's nothing happening on step 400. Absolutely. There's nothing happening on step 400 at the moment. So let's check out the next pair we have before we call it a day. We have V51s. V51s just smash target on the weekly time frame. So if you are with your phone, you can check your MT5 and look at and check it out if you can see anything clearly there. So V50 just smashes the target on the 15 on the weekly time frame, 24-hour time frame, took out the targets, and on the 4 hour time frame, we don't have anything currently happening on the 4 hour time frame. So we are not anticipating anything on the 4 hour time frame at the moment. So January has really been a tough month where we are not seeing setup. Most of the players are trying to restructure, and we need to be very, very patient and wait for the right time to strike, right setup and take quality setup. So nothing happening on V51s. But if something comes up, we always know because every day we do analysis on this channel, 6 a.m. to 7 a.m. And the last but not the least is V25 volatility 25 index. Let's check what is happening on volatility 25 index today, and let's see. So on the weekly time frame, volatility 25 index has been on a bearish move, a really bearish move, heavily bearish move. So we're going to scale to the 4 hour time frame and check if we are going to see anything. But then, if you look closely, you see that we have a sweep of liquidity on the daily time frame. So if price come back to this zone, it's still good. We will start looking for continuation on the 4 hour. So we have our first row here, sweep. We have our second row, break of structure, first break of structure. We have our third row, which is our structural liquidity. And we have our fourth row, which is second break of structure. And then we anticipate price to come into the zone, okay, and start selling to the opposite direction. So when price come into that zone, this point of interest here, and start giving us continuation on the 4 hour time frame, 1 hour time frame, we can then scale down to the lower time frame and start selling. Okay, 15 minutes, 10 minutes, and start selling. That's what we are going to be doing. That's what we are going to be doing. So if you watch all of this to the end, we've come to the end of today analysis, and as you can see, we haven't gotten any setup at the moment. We've checked uh we've checked this pair so far, which is V step 100, V100 volatility 100, step 500, V30s, V50, V90s, V25, V75, V15, V10, V75, step 300, 500, 100, 200, 400, 50, and V25. And so far, we haven't gotten any setup on those time frame. So the reason why we haven't gotten any setup is because we are doing top-down analysis, and that is what is going to give us more accuracy when we are executing trade, and we'll have more confidence when taking those trades. All right, and because of that, we are looking for quality setup and not quantity of setup. Because with that top-down analysis, we would have gotten a setup. But what is the chances that this trade they are going to hold? So that is why we need to always do top-down analysis and know that we are doing the right thing. So we've come to this session. We have come to the end of today's session. See you tomorrow next time. See you tomorrow the same time, 6 a.m. to 7 a.m. Don't forget to like, subscribe, and share the link to everyone who is looking for to learn trading and grow together with us. So I'll see you tomorrow. Do have a nice day. All right. Bye.